morning. This is Horizon's Middle East and Africa, our top stories this morning. Syrian TV reporting that rebel group Hayat Tahrir al-Sham's political chief Mohammed al-Bashir is to form a transitional government. Chinese stocks making gains after top leaders signal bolder economic support next year, including looser monetary policy and a focus on lifting consumption. Plus, our exclusive interview with Citigroup CEO Jane Fraser on her turnaround plan. Well, I might have to repeat all of those headlines in case you didn't hear them, but we are right here in Abu Dhabi for Abu Dhabi Finance Week. A little bit of noise behind me, which is to be expected at these conferences. We've got a cracking show lined up for you today. Plenty of interviews going on here on the sidelines of Abu Dhabi Finance Week. Before we delve into some of the key political, geopolitical stories of the day, as ever, let's start with markets. Because we did see a bit of a pullback yesterday for Wall Street indices, both the S&P and the Nasdaq ending in the red yesterday. Some questions about Nvidia. The stock ended down 4%. The Chinese are opening up a probe into the stock. So the reaction was pretty negative, not just on Nvidia, but on the tech complex as a whole. So that's a story that we're going to be monitoring very closely. But then on the flip side, we are seeing some really positive price action out of China overnight. Some of these Asian stocks are reacting to the promise of more stimulus to come out of Chinese authorities. So what we are getting is a positive handover from Asian equities overnight. I'm sure Ava will talk about that in a moment. But then also commodities, key commodities, iron ore in focus today. We saw a bit of a jump up northwards of 2-3% at one point, now tracking about 0.6% higher. The positive news from China's stimulus spilling over into the commodity space as well. As for our chart today, well, this is just keeping track of S&P performance year to date. And here we go. We are almost up 30% year to date for the S&P. It is set for its best year in 5 years. And there you go. Typically, you would think on a year where the index has done so well, it would actually be positive for incumbents. But interestingly, of course, we know there's going to be a change in administration in the U.S. despite the strong performance of the stock market. So just going to park that one here. Okay, let's talk more about what some of these markets in Asia are doing. Avril is in our Singapore studio, and today it's all China, China.
Yeah, China tailwind. It's even helping markets in South Korea that have not seen any gains since the martial law short-lived imposition last week to some gains today. And this is really the Politburo signals of stimulus, right? Talking about moderately loose monetary policy. It's a shift in stance, something we haven't seen since the global financial crisis. So a lot of market expectations out there. These are among the things that the Politburo have been signaling. But I think it speaks volumes in how you're seeing this mainland stock benchmark faring today. It popped 3% higher earlier in the session, but it's paired a fair bit of gains. I think there is cautious optimism in the markets. This is a market that has experienced a number of policy disappointments recently. And don't forget, after the tone from the Politburo, it's really up to the Chinese Economic Work Conference to follow through with policy making. So I think maybe that's what investors really want to see. But for now, it's positive in Chinese stocks. Jumana.
Yep, green on the screen. Avril, thank you so much. Avril Hong in Singapore. Well, Syrian television is reporting the rebel group that toppled President Bashar Al-Assad has begun forming a transitional government. It is being led by Mohammed al-Bashir, the head of a quasi-government set up in 2017 by Hayat Tahrir al-Sham, that is the main rebel group HDS in Idlib. Let's get the latest with Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. Stuart, so the process of forming a government has begun. What do we know about Mohammed al-Bashir?
Yeah, good morning, Jumana. So he was the guy that was basically running the government up in Idlib province, so that was sort of that breakaway area. And they do have a little bit of form in terms of running sort of basic services for people, so they're not coming entirely out of nowhere. What's entirely unclear at this stage, and hopefully we'll get clarity over the next few days, is what exactly is that process? Who is going to sit down with who, when, what are they going to talk about, and what exactly is on the table? And I think if you look at the reaction from certainly the international community, including the UN Security Council yesterday, I think there's a great deal of nervousness out there about what this might look like, what this process might look like, because remember, there are so many competing influences and people jostling for power within the country, not just internally, of course, but externally, with all the neighbours basically either taking territorial gains to cement their positions or making very loud diplomatic noises.
Yeah. Stuart, there was a little bit of chats yesterday. I think many in the Western media have started to question whether governments in the US and in the West could actually move to remove the terrorist organization designation that they have for HTS. What is the likelihood that we see that happening, do you think?
I think very unlikely in the short term, just because you can't spend several years saying something or someone is a terrorist or terrorist organization and then in the space of 24 hours change your mind. I think if there's enough evidence built up over enough time, and certainly the rhetoric coming from HTS's leadership has been reasonably positive, but if that actually transpires into reality on the ground and minorities are protected, rights are protected, then I think that's an ongoing discussion that will have to be had. But if fundamentally you end up with this group or something resembling this group in charge of the government, at some stage the international community is going to have to decide whether it's going to continue to basically brand it as a pariah or not.
Yeah. And equally, we talked about all of the different players that have a stake in what happens with Syria. Talk to us about what is going on with Israel, because it seems as though they have made somewhat of an incursion into the buffer zone in the Golan Heights. What is exactly going on there, Stuart?
So what seems to have happened is you basically have this sort of sandwich mechanism next to the Golan Heights where you have an Israeli line, a demilitarized zone, and then a Syrian line. And the Syrian army basically abandoned its positions right along that line. And so the Israelis took a look at that, thought that is a major security threat to us because effectively you've got nothing between us and anyone that wants to come into Israel. And so they moved across the demilitarized zone and then into what was once occupied by the Syrian army. Now they have said that they have no interest in staying there long term, and once they're assured of the security situation, they intend to retreat back to their side of the demilitarized zone. But of course, given everything we've spoken about, this isn't likely to happen anytime soon. But I don't think there's any indication yet that they're there for the long term if they can avoid it.
Yeah. Okay. Very clear. Bloomberg, Stuart Livingstone-Wallace, thank you very much for the reporting on the latest out of Syria. Well, still ahead, AXA IM Alts talks about growth opportunities in the UAE as they commit to expanding in the Middle East. Global head Isabelle Scemama joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Abu Dhabi. Well, we're here on day 2 of the Abu Dhabi Finance Week, where thousands of delegates are gathered to explore opportunities in the UAE and the wider region. Joining us now is Isabelle Scemama, the global head of AXA IM Alts, which opened a regional office in Abu Dhabi in July. Great to have you with us in person. We did speak back in July when you announced the opening of the office. Just give us a refresher as to why this region, particularly Abu Dhabi, was interesting for you.
So very happy to be back in the region. Yes, as you said, we opened an office in July, and this was a continuation of our business here in the region. We are already managing $3 billion of AUM on behalf of investors here in the region. So the idea is to continue and to expand in the region from Abu Dhabi. And yeah, it's a long-term play, and pursuing our partnership with local players here. That's the plan.
Are you thinking about other cities as well? I know Riyadh also making a big push to attract asset managers like yourself.
We are, for the moment, covering the region from Abu Dhabi, with also some people flying in and out, also to Riyadh. So I'm here in the region. I will certainly come back several times next year, as well as the rest of the team.
And you're deploying capital into the region, right?
No, we are not deploying capital into the region for the moment. On the long term, yes, maybe. Over time, yes, maybe. I'm in charge of alternative assets, so private assets. So before entering and deploying capital, you really need to be sure that you will be able to deploy at scale. But the objective is to increase our partnership with players here in the region. And you may have heard that AXA IM, there is a process going on with AXA IM, and AXA is intend to sell the asset management platform. BNP is the purchaser, and you know that BNP has a very strong presence here in the region. So I'm sure that when the transaction will be closed, it will be something that will be on the top of the agenda, and seeing how we will continue to expand here in the region.
Yeah, absolutely. Something to bear in mind, of course, with BNP's presence here. Let me just ask you a broader question about how you see the investment outlook going into 2025. We're having lots of macro conversations here about interest rates, about opportunities, about private credit. Are you excited about the opportunities 2025 offers?
Yeah, well, interest rate, they always impact the entire investment universe. But what we've seen over the past 2 years is that private credit, but it goes beyond direct lending. It's not just direct lending. We are also covering the entire range of credit, structured finance, alternative credit. And yes, in direct lending, it's not just corporate direct lending, but real estate, infrastructure direct lending. So that has been the big theme over the past 2 years, where we have expanded quite a lot. And I assume it will continue to be the case for next year. This is an asset class that is quite defensive and offering, good returns, and with diversifying the portfolio of a lot of investors that were more invested in real estate or private equity. So that will continue to be a big focus, I'm sure, for the next year.
And you yourselves acquired CAPSA just a couple of months ago, which is interesting. Is this just the beginning of further consolidation we're going to see in the private credit space, do you think?
It's part of the story, of the consolidation story. The reality for us is that CAPSA, we have had a long-term partnership with them. We have increased our participation, our investment into CAPSA over the last 15 years. So it's just a new step where now we have 100% of the company. This complements our range of products, adding direct lending and more traditional private equity. So that was the objective, to be this one-stop shop and covering the entire alternative universe. So it's more a continuation, but yes, I think
it really does feel like a lot of consolidation is going on. BlackRock recently announced that they're purchasing HBS as well. Is all of this going to be a positive for borrowers, do you think? Just that there is so much movement and activity around the private credit market.
It's not just private credit, because you have had other big acquisition and big deals for infrastructure, in the past real estate also. So I think it's the entire alternative universe that is considered. And for credit, I think what is really at stake is the fact that it's not just now direct lending, but everybody wants to go beyond the direct lending. So direct lending is something like $2 trillion market. Yep. When you look at the entire credit universe, we are more talking about something like 30 trillion, so which is big, and it means expanding beyond direct lending, and that's what we are looking at. We have been present in those different credit, in this entire credit universe for the last 20 years, and it's what we see a lot of people considering today.
Do you think that the regulators are going to start looking more closely at this part of the market, simply because there's so much excitement, there's so much money going into it? Asset managers are flocking towards private credit, but still it doesn't tend to be as heavily regulated or participate in as much oversight as other parts of the market.
We are regulated. Asset management is a regulated business. In Europe, in France, we are regulated, or in Europe it's the AFM regulation, so it's part of a regulated business. It's just a fact. For me, it's more the fact that banks are under constraints, and notably capital constraints. So there is a real disintermediation trend that is going on, and that's just the continuation of this, but what we see is more and more also partnership between banks and asset managers, banks providing leverage to asset managers. So I think for the economy it's good because it's allow new source of capital to enter into the market. But asset managers, as asset managers, we are regulated. So
yeah. Well, question on your home market in France. So much political noise. People are really concerned about the outlook on the deficit in coming years, the fact that there isn't a government right now. It's going to be very difficult to cobble together another government. How is that going to affect the financial institutions that operate within France domestically? Are you worried about the outlook here?
But France for us is just 20% or it depends on the asset class or less of our AUM. So we have a global presence. We have definitely a pan-European presence. So and I think the answer to this question is politics are sometimes challenging, not just in France, but also elsewhere. And yes, that's where diversification makes sense. And we will continue to diversify our portfolio across asset classes. The acquisition of CAPSA is definitely part of this objective to continue to cover the entire spectrum. At the beginning, we are the largest real estate player in Europe. We have expanded into credit, being also one of the largest players in credit. We are also covering infrastructure, private equity. So the idea is to diversify across asset classes. Within each of those asset classes, not just looking at offices when talking about real estate. Offices is only less than 30% of our portfolio, but expanding into other territories. Yeah. And it's also a geographic diversification. So I think the answer to your question is, it just gives, stay diversify. Yeah. And it's interesting because when you look at the past years, interest rates have impacted significantly asset classes, but credit has been quite resilient due to the fact that notably private credit is indexed on floating rates. Yeah. But today, and I'm sure that's what we will see in the course of 2025, opportunities are re-emerging, notably in real estate, of course in infrastructure. So that's the way we are looking at the market.
Fantastic. Really good to chat to you. Isabelle Scemama, the global head of AXA IM Alts. Thank you so much for joining us.
Thank you.
And later today, it is Bloomberg's Women, Money and Power event. On the opening trade, tune in for Oaktree's Danielle Pauly, Guggenheim's Ann Walsh, Blackstone's Joan Solotar, and Citi Private Bank's Ida Liu. Now for a look at some of the other stories we're following today. South Korea's Chosun Ilbo newspaper says the ruling People Power Party will disclose a roadmap on Tuesday for the orderly exit of the president Yoon Suk-yeol. Yoon has been banned from traveling overseas as a series of investigations put him at risk of detention over his chaotic declaration of martial law. The main opposition party says the parliament intends to pass a new budget today to help clear uncertainty. And India has named career bureaucrat Sanjay Malhotra as the new governor of its central bank. It ends weeks of speculation over who would lead monetary policy in the world's fastest growing major economy. The Princeton graduate begins a 3-year term on Wednesday, succeeding Shekhnada Das, who has been the RBI chief since 2018. And coming up, a suspect charged with the murder of United Health Group executive Brian Thompson will bring you the latest and a roundup of some of the other stories we're following. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Abu Dhabi today. Citigroup CEO Jane Fraser is halfway through her 5-year plan to turn around the bank, having made significant changes to simplify operations and improve profitability. But the lender still faces challenges, including regulatory fines, trading losses, and skepticism from analysts, which have impacted its stock price. Fraser spoke to Bloomberg's Shonali Basak about her goals.
My ambition is to be a high-returning, high-quality earnings, modern, simpler institution that continues to play a shaping role in the global financial system. We're truly privileged to be as in as many locations as we are, with a talent base with such a global mindset and an ambition about it. So I think about we've got the right strategy and vision, we're executing with the right organization, we've got making sure we've got the right talent and culture in the firm, and that we're a simpler, well-controlled, modern organization. We'll have got the job done.
If you could give yourself a grade on the restructuring plan, what would you give yourself?
We aren't done yet, so I can't give ourselves a grade yet. I've always said that this is a multi-year journey. We're going to be very disciplined about making sure that we don't take shortcuts. And the problem with grading yourself along the way is it becomes too tempting to do a quarter by quarter grade, as opposed to we're just very, very focused and accountable for delivering what the end product looks like.
Speaking of the end product, you've set out a goal to bring returns on tangible common equity closer to 11 to 12%.
In the medium term and beyond after.
So Bloomberg consensus this year has Citigroup's return on tangible common equity at 6.8%. What do you say to critics that feel like you're not getting there fast enough?
We have undertaken a multi-year major transformation of an institution. We are working with ambition, with accountability, and with urgency. So we've already divested all but one of our international consumer franchises and wound down those that we couldn't. We've undertaken a massive reorganization of a company of 240,000 employees in 6 months. Such that 50,000 people have a different manager than had 6 months ago. Now, it's been major change. We're being bold, we're ambitious, we're holding ourselves very much to account to deliver on the outcomes we should do. And I say, look at the proof. We're delivering, and we're determined to keep on doing so.
Bloomberg TV's interview with Citigroup CEO Jane Fraser ahead of Bloomberg's Women, Money and Power event later today in London. Now for a look at some of the other stories we are following. A suspect has been charged with the murder of United Health Group executive Brian Thompson. 26-year-old Luigi Mangione was arrested after a tip-off at a McDonald's restaurant in Pennsylvania, where it's alleged he was carrying a pistol and a silencer, both made with a 3D printer. And a quick look at equity futures as we are steadily getting into the European Open. And despite the positive handover from Asian stocks this morning, a lot of green on the screen in China, S&P futures, Nasdaq futures leaning towards the red. European futures also down about 0.4%. But speaking of China, Chinese stocks are making gains after top leaders signal bolder economic support next year as Beijing braces for a trade war when Donald Trump takes office. We're going to be discussing all the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Syrian TV reporting that rebel group Hayat Tahrir al-Sham's political chief Mohammed al-Bashir is to form a transitional government. Chinese stocks making gains after top leaders signal bolder economic support next year, including looser monetary policy and a focus on lifting consumption. Plus, the World Bank cuts Kenya's 2024 growth forecast because of flooding and anti-government protests. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Abu Dhabi for Abu Dhabi Finance Week. Let's get you a check on these markets. Leaning towards the red for the futures today, despite the better handover that we've had from Asian stocks. China stimulus in focus, or at least the promise of further stimulus out of China, and a slight change in the monetary policy stance, perhaps further loosening to come, is giving a boost to some of those stocks in Asia overnight. In even commodities complex, you can see iron ore up 0.5% today. At one point, we were up 3%, and Chinese stocks also were up 3.5% at one point, have pared back some of those gains. But Wall Street indices leaning towards the red, not enjoying much of the rally that we're seeing in overnight. And this after a pullback yesterday, in yesterday's session. Some focus on the tech stocks here, Magnificent Seven slipping. NVIDIA also in focus, with China now launching a probe into some of their practices. So keep an eye on that story and how it plays out in the U.S. session. Our terminal chart for me is about U.S. dollars. So the dollar optimism seems to be spreading. And this is quite interesting because obviously there have been alternative views about the greenback and the direction of travel for the greenback. But since the election, into the election, out of the election, the dollar has enjoyed quite a strong rally. And interesting to note here that investors have now reduced their net dollar short positions to $2 billion. That is the lowest level since April 2017. So hedge funds are increasing their bullish bets, so are asset managers. And there is the chart for you on dollar optimism. All right, Chinese stocks are making gains after Beijing's top leader signals bolder economic support next year ahead of Donald Trump's return to the White House. President Xi Jinping's decision-making Politburo vowed to embrace a moderately loose monetary policy in 2025. For more, let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel, in Hong Kong. Stephen, really interesting reaction that we're getting in the markets today. It feels as though once more authorities are hinting at more stimulus to come without actually offering that stimulus. What did we learn yesterday?
Well, right. The Politburo, which is the top 24 party members in China with Xi Jinping at the top, had a closed-door session yesterday in Beijing, and they came out with a statement. Keep in mind, they set the tone. They don't set specific targets. That's going to be up to the Central Economic Work Conference, which begins tomorrow, to flesh out the details. So that's why the tone is very important. And according to Robin Xing of Morgan Stanley, he says the Politburo essentially sent the most aggressive stimulus tone we've seen in a decade. They're shifting for 2025 the sentiment towards a moderately loose monetary policy. It had been prudent policy for the better part of the last 14 years. The last time we saw a moderately loose monetary policy in China was 2008 at the beginning of the global financial crisis till about 2010. Ever since then, it's been more prudent because they don't want to necessarily stoke asset bubbles and debt issues in China. So now they are loosening things. They didn't give the details, but they did go through a long laundry list of problems facing the Chinese economy, from property, from the stock market to consumer confidence. And they are vowing to address all of those along with a moderately looser monetary policy. So we can probably expect into the new year, interest rate cuts, perhaps even some property stimulus, stock market stabilization plan. These are all speculative right now until we get the details.
Yeah, and of course they want to tread the line pretty carefully because on one hand they want to stimulate the economy, but they also don't want to go back to the day of credit excesses. So the language about monetary policy, I think, is quite interesting here, to go and signaling that they're going towards a tighter, slightly looser policy stance, even though in the years where they were deemed to be perhaps a little bit more restrictive than where they are right now, we did see a massive credit bonanza and subsequent bust in the real estate market. So how do you think they're going to be sort of grappling between the desire to stimulate the economy but also not wanting to bring about another bust in the credit markets or put more pressure on real estate?
Yeah, that's actually, the ongoing debate, and it's the balance that they have to strike, especially at a time when the provinces have their fiscal coffers extremely stretched and almost barren because of the costs associated with COVID-0 over 3 years. They do not necessarily want to see more asset bubbles and debt issues arise at the local level, and of course they're trying to clean up that problem throughout the property sector. But what choice do they have right now? Because, again, you have all those problems with consumer confidence. That has not seen a floor. They're not spending. The property market has not seen a floor. You're seeing profitability being hit badly because of overcapacity in key areas, strategic areas like electric vehicles. So you have all these domestic problems, And then on top of that, you have the one main pillar of strength, and that is exports, possibly taking a huge hit if there is indeed a new trade war with the Trump administration as of January 20th when he takes office, if he fulfills his pledge of 60% tariffs all across the board on Chinese exports. They have to boost domestic consumption. It's a bit of an urgent task, and it might be fleshed out this week in the the Economic Work Conference, followed by enshrining any kind of stimulus into law at the National People's Congress that begins in the first week of March.
Bloomberg, Stephen Engel in Hong Kong, thank you. Well, let's get out to Avril now, who's been tracking the developments and the reaction in some of these key Asian markets. Avril, just give us a sense for what investors are saying and how a sentiment is going into next year, given some of the hints that the authorities are giving about the possibility of further stimulus.
Yeah, if I can phrase it quite concisely, I think it's a mood of cautious optimism. I mean, as you heard from Steve, it's really the policy stimulus signals that are quite different in terms of the tone and what it's suggesting about monetary policy, moderately loose. This is a key change, but the idea that investors want to see more meat on the bones in terms of policy, I think is what keeping the stock markets a bit more measured in their reaction. So we saw a bit of pairing of the earlier declines or the earlier gains, I should say. I wanted to highlight what we're seeing in the currency space as well. I think investors, FX traders, they seem to be banking on that potential for an improvement in economic fundamentals more so than the dovish monetary stance. So we're seeing that strength coming through, strengthening, I should say, because this is relative to what we saw last week, 730 on dollar China, a lot of weakness there, and that is moving a bit stronger today. I also wanted to highlight what we're seeing in Australia. Of course, this is an economy that has its fates really closely tied with China's. Today, the central bank left rates unchanged. This is as expected. But what traders had been bracing for amid the deterioration of growth in the country was dovish guidance from the RBA. And indeed, if you look through the statement, what it's been saying about inflation, a bit more confidence on fighting it, that sounds a bit dovish to traders. We're actually seeing the Aussie dollar on the back foot today. Jumana.
Yeah, and we're also on Market Watch. I was just reading a note put out by our colleague David Inglis, who's saying that we're very close to those year-to-date highs on the Shanghai Composite. So let's keep an eye out for that, given the turnaround in that index in the past couple of months. Thank you, April, in Singapore. Well, coming up, a Syrian TV reports that rebel group Hayat Tahrir al-Sham's political chief Mohammed al-Bashir is to form a transitional government. We'll discuss the path forward next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Abu Dhabi. Syrian television is reporting the rebel group that toppled President Bashar Al-Assad has tasked Mohammed al-Bashir to form a transitional government. The trained engineer is the head of a quasi-government set up in 2017 by Hayat Tahrir al-Sham in Idlib. So let's bring in former Australian ambassador to Syria, Ross Burns. Ross is also the author of books including Understanding Syria Through 40 Monuments, a story of survival. So no better placed person to talk to us about everything that is going on in Syria, the latest developments. Huge. Ambassador, good to have you with us. Do you see this as a real opportunity for state building and the reconstruction of Syria from an institutional standpoint?
Well, it's hugely important. I don't think we can predict how it will all play out in the end, because there are quite a few wrinkles in what the issues that have to be addressed. But I think it's very important. I think it's good that they've been able to take on the idea of using the former Prime Minister as the head of the new government. And it'll be very interesting to see who else he brings in as other members of the government. But it's early days yet, but I think these are developments which just couldn't even been imagined 10 days ago. And that has to be good news.
What role should the international community be playing here? I mean, obviously, Syria has been a playground for so many countries in the region, outside the region, for a very long time, with all of the troops and various militias allied to certain countries. But in terms of what happens next for Syria, should the international community be helping to play more of a constructive role?
Yes, I think essentially they should be staying out of it, but there is one thing they can do, which is to remove the sanctions and let the government be a government. And that you couldn't say that a few weeks ago because people would think you were crazy and you'd fail to appreciate the good work that sanctions were doing. But I was never one who thought that sanctions were doing much good. They were simply driving a very impoverished and impoverished population into the arms of phony middlemen and traders, and that's not good for anyone.
Overnight, there were reports that the Israeli IDF, had targeted some chemical weapons warehouses, that they had begun to make some ground incursions into the demilitarized zone, which has prompted sharp rebukes from both Egypt and Saudi Arabia this morning. Saudi saying Israel's targeting of Syria is a violation of international law. What do you think Israel is trying to achieve here?
I can also speak as having been ambassador in Israel, and I can only say I think they are just being bloody-minded. I don't see. I mean, there may be issues to address there, but they haven't, as usual. We're never provided with any relevant information. But I just think they're reminding all Syrians that they have a capacity to intervene, and they will continue to reserve their right to use that. And I just don't think that's helpful at this stage.
One of the other big questions that people are asking, just to turn it back to this potential government formation, is whether these sort of rival rebel groups can actually come together. There are many disparate groups that are operating within Syria, and whether they can actually align behind this new transitional government. What is your expectation for whether that can be achieved or not?
Well, I think that is the first range of questions that do arise from the events we've seen in the last 10 days, because the forces behind the movement to get rid of the Assad government took on very disparate elements both in the ranks of HTF and also in alliance with the apparent alliance or complicity with over the border with Turkey. So it's a very complicated set of equations, but it's much less complicated than it was 10 days ago. Because you now have a government... I
think that's a fair way to put it.
Yeah, you now have a government which is prepared to deal with all members of the community and to try to address a lot of the tensions which have arisen over the last 13 years.
Very fair. Sir, we're going to leave it there. Thank you so much for taking the time to speak with us today. That was Ross Burns, the former Australian ambassador to Syria and author of Understanding Syria Through 40 Monuments, A Story of Survival. Thank you. Now for a look at some of the other stories we're following. Shares of chocolate maker Hershey surged after Bloomberg reported that its bigger rival Mondelez is looking to buy it. A potential deal would create one of the world's biggest candy companies with combined sales of almost $50 billion. Sources say Mondelez has made a preliminary approach to Hershey, which has a value of more than $44 billion, including debt. China's trade conflict with the U.S. is now extending to the drones that have become a vital part of Ukraine's defense. Multiple sources say manufacturers in China have recently begun limiting sales to the U.S. and Europe of key components used to build unmanned aerial vehicles. Western officials say they expect Beijing to widen export restrictions on drone cards in the new year. And China has opened an investigation into NVIDIA over suspicions that the U.S. chipmaker broke anti-monopoly laws around the 2020 deal. Beijing had given approval for the deal 4 years ago on condition that NVIDIA did not discriminate against Chinese companies. The move is being seen as Beijing's latest response to escalating U.S. technology curbs. TikTok has asked for a pause on the U.S. law forcing either a sale or ban of the app owned by China's ByteDance. A hold would give the Supreme Court or the incoming Trump administration time to decide on TikTok's future in America. The law is currently set to take effect on January 19, the day before Trump is inaugurated. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Abu Dhabi. Binance Holdings CEO Richard Teng believes the future is bright for crypto. He spoke to Bloomberg TV about his expectations for the market ahead of the return of U.S. President-elect Donald Trump.
If you tell people before 2024 Bitcoin will hit 100,000, there'll be ETF being approved for Bitcoin, Ethereum, Solana, and several others. And as well as institutions, I mean, the largest asset manager in the world, BlackRock, has gone from a skeptic to believer. I think people will not believe it. But come to the end of 2024, all those have come true. We have now a very crypto-friendly president in the States and extremely smart strategy appointing an AI and crypto czar on that front, because this too represents the most innovative technology for the future, and countries will do extremely well. I mean, Abu Dhabi this week, the capital of capital, again, Abu Dhabi and UAE has been very foresightful in that front to start investing AI, blockchain, to move those very early on. So we are seeing the results of all those deployment in Abu Dhabi and UAE now. So countries will do very, very, very well to continue to focus on these two technology. And we will continue to focus on serving our fast expanding user base. We're close to 250 million users globally now, 70 million onboarded this year alone. So we are very excited with the journey ahead.
But of course, Binance is under monitorship by the US DOJ and the US Treasury's Financial Crimes Enforcement Network. Would you be looking to press the Trump administration to shorten or terminate the monitorships, given the president-elect's kind of preference, as we say, for looser crypto regulation?
Well, I mean, any of those discussion, I think, is new. I believe that compliance is the way to go, right? So Binance has always been a user-first organization. But going forward, given that regulations is going to be much clearer throughout the world, we have the ability to invest very heavily in compliance space. I want to make compliance a competitive advantage for ourselves, right? So last year alone, we invested $213 million just on our compliance program, which is a more than 30% increase compared to the year before. And this year, it go up even more. We are the most licensed and regulated exchange globally now. We have more than 20 different jurisdictions that license and regulate us. More recently in exciting places like India and Argentina. So we are working with global policymakers, lawmakers, to really support the crypto journey, to support the crypto deployment. And we continue to work very closely with US monitors on that front to continue to see whether there are areas that we can enhance the program further. I think is a good competitive advantage. We are able to invest in places that our competitors are not being able to invest in.
That was Binance Holdings CEO Richard Teng speaking with Bloomberg's Lazy Bird. And speaking of crypto, we did see a bit of a tumble for Bitcoin and other cryptocurrencies overnight. So some of that rally, the frenzy that we saw into and out of the U.S. elections has started to pair off a little bit. Now for a look at some of the other stories we're following today. A Treasury official says Zambia is seeking to remedy an erroneous payment made to China by its power utility. ZESCO had been accumulating revenues from electricity sales in a securitized account from a power plant that Chinese companies built and financed and, quote, unfortunately transferred about $80 million from the account. Zambia's government is currently finalizing a prolonged debt restructuring deal with Beijing. Taiwan has put troops on high alert after saying China restricted airspace off its southeastern coast and sent naval vessels near the strait separating them. It's a potential sign that Beijing is preparing for military drills in the waterway. And it follows Taiwanese President Lai Ching-te's recent visits to the U.S. territories of Hawaii and Guam, which China has condemned. And a look at markets. A bit of a pullback for U.S. equities yesterday. Today, futures not doing that much attention. It turns to those CPI figures coming out tomorrow. Will we get a sticky print? That's going to be key for Fed decision making. And then we look at the European session heading into Europe. We are down about 0.4% overnight, though. The handover from Asia was pretty strong. Chinese equities in the green after those announcements from the Chinese authorities suggesting more stimulus could be coming. But that was it for the first hour of Horizons Middle East and Africa. I'm Jumana Brisecci in Abu Dhabi. Stay tuned for the second hour as Jennifer Sabazaja joins me from Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Syrian TV reporting that rebel group Hayat Tahrir al-Sham's political chief Mohammed al-Bashir is to form a transitional government. Chinese stocks making gains after top leaders signal bolder economic support next year, including looser monetary policy and a focus on lifting consumption. Plus, our exclusive interview with Citigroup CEO Jane Fraser on her turnaround plan. Good morning. It is just gone 7 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Good to see you, Jumana.
Good to see you too, Jen. You and I have been all over the world in the last couple of days. I'm Jumana Brisecci in Abu Dhabi for Abu Dhabi Finance Week, where it's just gone 9 a.m. Welcome to the second hour of Horizons Middle East and Africa, piecing together all of the main global market stories, geopolitical stories, massive developments over here in the Middle East. This is how markets are reacting today. We are leaning towards the red. This after pullback for some of the majors in Wall Street yesterday. Marginal pullback. We're still very close to the all-time record highs, as we've been speaking about day in, day out on the show this year. NASDAQ also in focus. NVIDIA coming under a probe from China. That sent the stock tumbling about 4% yesterday, which is why you are seeing a bit of red on the screen. And then, of course, the big event this week is going to be that CPI figure coming through tomorrow. So watch out for that in terms of where these inflation numbers come in and also what that might mean for Fed interest rate cut expectations. But the big theme and the story overnight for Asian markets has been the announcements yesterday from Chinese authorities hinting at potentially further stimulus, a slightly looser monetary policy stance. On the back of that, we're seeing a better handover from some of these markets. MSCI Asia Pacific up 0.2%. So some of these Chinese equities, though, were up more than 3% at one point. We've pared back some of those gains, but still leaning towards the green. And then commodities getting a bit of love as well on back of this China news. We've got iron ore up 0.6% today as well. As to the term chart, well, this one is pretty easy, but just wanted to highlight once more what an amazing year it has been for the S&P. Actually, this is its best year. It's set for its best year in 5 years. So we are looking at gains of around 30%, almost 30% year to date for the S&P. Quite remarkable, really. But back to geopolitics now. Syrian television is reporting the rebel group that toppled President Bashar Al-Assad has tasked Mohammed al-Bashir to form a transitional government. Al-Bashir is the head of a quasi-government set up in 2017 by Hayat Tahrir al-Sham in Idlib. The move reportedly came after a meeting between al-Bashir, the leader of HDS, and Syria's former Prime Minister Ghazi al-Jalali. For more, let's bring in Bloomberg's Henry Mayer in Dubai, but also let's get out to Bloomberg's Honor Ant in Istanbul, a panel this morning. Honor, let me just start with you. Given the latest news, which is that Mohammed al-Bashir has been appointed as the interim prime minister, what do we know about him? And what does this tell us about the process of state building that has now begun in Syria?
Well, it shows that the transitional process has already begun. That was a landmark development that we were looking out for. The fact that HTS-led rebels finally named one of their own as the head of the transitional government in coordination with, as you said, the last prime minister of Syria appointed by Bashar Al-Assad, now the toppled leader of Syria, shows that rebels are finally trying to basically turn their military movement into a political one and trying to ensure an orderly and swift transition from a state of civil war into a more normal state of affairs. So in that sense, Mohammed al-Bashir's appointment is really a landmark development.
Henry, let me pivot to you now. The fall of Bashar al-Assad represents a setback for at least one person, for one country, and that is Russia. Many people have been talking about the fact that the demise happened so quickly was a reflection of the lack of support that showed up this time from Russia. They're clearly embroiled in a war in Ukraine. What does all of this mean for Russia's ambitions in the region and globally?
Yes, you're absolutely right. I mean, of course, the two main losers from this were Iran and Russia. For Russia, they made their support for Bashar al-Assad, I would say, a calling card of their policy in the Middle East. It was a huge boost to the image of Russia in the region. 2015, when the Russian intervention succeeded in preserving Assad's grip on power, together with, of course, pro-Iranian forces on the ground. And now his swift demise is really a big blow to Russia's reputation in the region. And of course, there's the issue of the Russian military presence in Syria, which is now at threat.
Honor, just to segue from that, clearly with Russia potentially playing less of an influential role in the region, does this create an opportunity for President Erdogan to step in as one of the key power brokers now?
Yeah, President Erdogan literally stuck to his guns until Syria's President Bashar Al-Assad was toppled and forcibly flee the country. So besides that most obvious political gain for Erdogan, Turkey stands to benefit from the power vacuum or the transition in Syria in various ways. First and foremost, we will see that Turkey will maintain an outside influence on how the political landscape is reshaped in Syria. Following this bloody period of civil war that lasted 14 years. But more importantly for Turkey, we will see that Turkish authorities will try and establish a 30-kilometer deep long buffer zone along their border with Syria, which stands at a length of 900 kilometers. That's a huge issue for Turkey politically. Also, not only because of the national security threats it says it receives from US-backed Kurdish rebels in Syria, but also because Turkey wants to engineer a return of at least some of the refugees, some of the Syrians that it has hosted since the civil war began. The official number is at around 3.6 million, but many believe that the actual number of Syrians currently living in Turkey is far higher. So going forward, 6 months to 12 months from now, we will see that Turkey will try to engineer a return of those refugees back to Syria and possibly to areas that it will consider to be its buffer zone along the border with Syria.
Yeah. Henry, Russia still have a couple of air bases on the Syrian coast. They have a naval air base, they have a naval base rather, and they have an air base in Tartus. Is there scope for some negotiations here vis-a-vis Ukraine and what is going on there with the war there? Could there be scope for a deal to be struck in which Russia pulls away from some of their military locations in Syria in exchange for getting perhaps more concessions on the Ukraine front?
I think that's very hard to say. I mean, what's abundantly clear is that, the new authorities in Syria have probably very little interest in allowing the Russians to maintain this military presence. Turkey, of course, is probably going to have a big say. And we understand, from Russian sources that their hope is to try and reach an agreement with Turkey. But regarding what you mentioned about a deal, a trade-off with Ukraine, these are pretty separate issues. I think, the most likely outcome is that Russia will have to give up the two bases.
Very clear. Henry and Honor, thank you very much. That was Bloomberg's Honor Ant in Istanbul and Henry Mayer in Dubai. Thank you.
All right, to our other top story. Chinese stocks are gaining today after Beijing's top leaders signaled bolder economic support next year. President Xi Jinping's decision-making Politburo vowing to embrace a moderately loose monetary policy in 2025. For more, let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel, who is in Hong Kong for us. So, Stephen, there's a lot of focus on the language that we got and the tone that we got in this statement from the Politburo. Talk to us about the significance of it.
Well, the Politburo sets the tone. It doesn't set specific targets. That could potentially come as of tomorrow at the Central Economic Work Conference, which meets behind closed doors for a couple of days, takes the marching orders from the Politburo, and then kind of fleshes out the details that will essentially set the agenda for the annual session of Parliament in Beijing in March. But there's hope in the market that after the Central Economic Work Conference concludes on Thursday, we'll get more details because the tone was quite strong. In fact, Robin Xing from Morgan Stanley says the Politburo's December meeting, and we got that communique late yesterday, sent the most aggressive stimulus tone in a decade, because essentially, as you rightfully said, they're going to switch in 2025 to a moderately loose monetary policy. It had been a prudent policy for the last almost 14 years. Of course, there's asset bubbles and debt problems in China over that last decade that Xi Jinping has tried to rein in, obviously, exemplified by the crackdown on the property sector. Now, probably more important than switching to a moderately loose monetary policy, which was widely expected. They had room to cut rates further. What everyone's been looking for is for stimulus, fiscal stimulus in particular. Now, on that front, they said they will forcefully lift consumption. How are they going to do that? How are they going to build confidence among the consumer at a time, of course, when the export scenario looks fairly fragile because of the impending possible trade war with Donald Trump and those 60% tariffs? We're getting ahead of ourselves because right now the main concern is the domestic economy. And that's where we're going to be looking for some of the meat on the bones on what kind of policies will come out to kind of boost confidence of the consumer and stabilize the stock market and stabilize the property sector.
Right. And Stephen, is the expectation that we'll actually get those details and get that meat on the bone that you're talking about? Because in the past, we have heard some criticism about it being too vague in the past.
There's something called promise fatigue, or however you want to describe it. After the stimulus that we got in end of September, the markets reacted almost like what they did today. They shot up. Okay, they're finally going to do something. Then that fatigue set in and the market pulled back. And then we had the third plenum. Expectations were high going in, and then it petered out going out of it because we didn't get that meat on the bone. Now we had the Politburo meeting. They said the right things. I think they're learning that if they don't say enough, the markets sink. They said a lot. Now when are we going to get the details? It could come at the end of the Central Economic Work Conference. More likely, they set the agenda for the National People's Congress in March. Now, everyone says, wait a minute. The economy is suffering. There's all kinds of headwinds. Why wait to March? Isn't that too late? Well, I can also make an argument that while saying one thing and doing another, delaying it, the proverbial can down the road, is they're waiting to see exactly what kind of tariffs are going to come from the Trump administration, what kind of negotiations they can enter into, and just sort of feel it out until that annual session of Parliament.
Bloomberg, Stephen Engel, always great to get your reporting on. Stephen Engel there in Hong Kong for us. Let's take a closer look, though, at how the markets are reacting, as Stephen was just talking there, to China's signals of stimulus. Avril Hong is standing by in our Singapore studio. Avril, give us a sense of what we're seeing.
Yeah, Jen, we saw at the start of trade today, the morning session, traders were really upbeat, right? I mean, this is a key change in tone, whether you're talking about monetary policy or what is advocating for a more proactive fiscal policy stance. But it's really interesting how we've seen those gains more or less fizzle out, pairing of that. And I think this is, to Steve's point, what he was alluding to about how beyond tone, what investors want to see is that showing up in policy making. And today we also got data out of China, which kind of reinforces the sense that it is an economy that really could use more stimulus, more support. You look at exports growth, yes, it grew, but it moderated. And it's also missing the mark. Imports fell. Meantime, this is what we're seeing in Chinese bonds continuing to surge. That expectation of further stimulus and easing on dollar China dropping. Investors in the FX space only think that there's potential for improvement in economic fundamentals that seems to be supporting the yuan today. Guys.
All right, thanks so much, Avril Hong in Singapore. We'll check back in with you in just a bit. But coming up, we'll get the market outlook with tech-driven investor Systematica. That's coming up next. This is Bloomberg.
Well, we are here on day 2 of the Abu Dhabi Finance Week, where thousands of delegates are gathered to explore opportunities in the UAE and the region. Joining us now is Leda Braga, the CEO of Systematica Investments. Really good to have you with us. First of all, and this is a question that I'm asking everyone, what brings you to Abu Dhabi? Obviously, we're here at Abu Dhabi Finance Week, but what are the opportunities that you're seeing here right now?
Well, the Middle East, Abu Dhabi and Dubai have become a bit of a finance hub in the last few years. And we've had activity here for a very long time. And some of our oldest clients here have been our clients for nearly 20 years. So it's not like we're new to the region, but it feels good to see all this activity and everybody gathering here. So
yeah,
it's not to be missed.
For a long time, then you start to see the evolution.
Yeah.
Let me just ask you about how the year has been for Systematica, and it's been difficult, I guess, to sort of like catch on to specific trends this year. So just give us a sense for how it has gone by for you.
Yeah. So as a quantitative firm, we take the quantitative approach to investing, but we have different styles of investing. So different funds, different pieces of the offering. We run dozens of legal entities, but 6 main styles that we do. So some styles have done very well this year, some styles not so well. The trend following side is having a bit of trouble this year, so it hasn't been a particularly good year for that style. But some of the other styles, multi-strat or equity market neutral, they have done very well.
Yeah.
So it's a bit of a mixed year, really.
What do you say, again, I mean, this is like a time-old question, right, because quant funds are not new, but what is it? What is the competitive edge that a quant fund can offer to an allocator that discretionary funds cannot?
Look, it goes in line with the evolution of the industry. The hedge fund industry has become completely institutional. I came into the industry in 2001. Came into finance in 1993 through the banking side, but the buy side in 2001. It was still a very high net worth dominated segment, but that has changed. And so the institutional investor, he wants something different, right? He wants longevity. They want continuity. They worry about succession planning of our firms. The quantitative firm is naturally process driven, right? It's not about me or my colleague or some individual talent. It's about the team producing a machine that generates returns according to a certain discipline. And so for the pension fund, for the family office, the endowment that has the 10, 20, 30-year horizon, that is a really safe bet because the IP is clearly defined there.
Yeah.
And that's an edge. The other edge, I would say, is that a lot of these pension funds require specific styles and demand very effective fees for them. And again, in a quantitative approach, you can offer that scalability as a business model, right?
How is AI going to disrupt your industry? Because obviously, I mean, this is not new. You've been using machine learning and data models and data science for years now, but AI is becoming more widespread, and I wonder whether it could chip away at your competitive edge simply because other funds can start layering on AI to their own capabilities and ability to analyze.
To be part of the sessions hosted under AXA Abu Dhabi.
Yeah, we can keep going.
Okay.
I've been talking over them, but yes. So how do you think AI is going to change the game?
Look, as you point out, we've been the body of work that is known as machine learning or AI has been around for a long time.
Yeah.
We've been using techniques related to that field for a very long time, so it's nothing new to us. There's been a bit of a push in the last couple of years, and more tools are available. So for us, it's only positives, only positives. Productivity increases, data, unformatted data that was a bit difficult to use before. It's easier and easier and easier to use. Parsing specific data for certain markets has become super efficient. And so for us, it's just this incredible productivity tool, which the team quite naturally is at ease with. They absorb it, they use. Even production of code. We are kind of a technology firm. So people are writing a lot less code. They get the AI to produce code for them.
Just to round up the discussion, we've had several VAR shock incidents this year over the course of the summer, August, September, big moves in equities. And for discretionary traders, that creates an opportunity to buy. Not good news, I guess, if you're a systematic trader. How do you hedge against such incidents?
The opportunities are there regardless if you're systematic or if you're discretionary. We tend to formalize the risk analysis and prepare for these things. So we run, 100 scenarios on our portfolio every night. If we see an event coming up, we'll have a discussion about it. It's just, I think the activity is actually very similar between systematic and discretionary, except that we are very naturally process driven. So we don't go in there and say, let's offload this risk. We actually look at a scenario and size it.
Yeah, fascinating. Leda, it's really nice to chat to you. Thank you so much for powering through with the noise in the background and everything. Leda Braga, the CEO of Systematica, here on the sidelines of Abu Dhabi Finance Week, in case you didn't hear it on the speakers behind me. All right, coming up, we'll get a progress update from Citigroup CEO Jane Fraser. Our exclusive interview is ahead. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. A few stories we're following this morning. Shares of chocolate maker Hershey surged after Bloomberg reported that its bigger rival, Mondelez, is looking to buy it. A potential deal would create one of the world's biggest candy companies with combined sales of almost $50 billion. Sources say Mondelez has made a preliminary approach to Hershey's, which has a value of more than $44 billion, including debt. China's trade conflict with the U.S. is now extending to the drones that have become a vital part of Ukraine's defense. Multiple sources say manufacturers in China have recently begun limiting sales to the U.S. and Europe of key components used to build unmanned aerial vehicles. Western officials say they expect Beijing will widen export restrictions on drone parts in the new year. And China has opened an investigation into NVIDIA over suspicions that the U.S. chipmaker broke anti-monopoly laws around a 2020 deal. Beijing had given approval for the deal 4 years ago on condition that NVIDIA did not discriminate against Chinese companies. The move is being seen as Beijing's latest response to escalating U.S. technology curbs. And finally, TikTok has asked for a pause on the U.S. law forcing either a sale or ban of the app owned by China's ByteDance. A hold would give the Supreme Court or the incoming Trump administration time to decide on TikTok's future in America. The law is currently set to take effect on January 19th, the day before Trump is inaugurated.
Thanks for that, Jen. All right, let's take a look at key markets. Futures leaning now towards the green. We are seeing a bit of a turnaround. So S&P futures, Nasdaq basically flat. European futures slightly negative as we head into the European session. But coming up, we're going to have plenty more out of the third edition of Abu Dhabi Finance Week. Next, we're speaking to the CEO of General Atlantic, Bill Ford.
This is Horizons Middle East and Africa. I'm Jennifer Zabasaja. Our top stories this morning. Syrian TV reporting that rebel group Hayat Tahrir al-Sham's political chief Mohammed al-Bashir is to form a transitional government. Chinese stocks making gains after top leaders signal bolder economic support next year, including looser monetary policy and a focus on lifting consumption. Plus, the World Bank cuts Kenya's 2024 growth forecast because of flooding and anti-government protests. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Abu Dhabi. It is the second day of Abu Dhabi Finance Week. It's just on 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Jumana, plenty more coming from you there on the ground, but let's take a look at where markets are positioned, reacting to a lot of the news, both geopolitical and market moving that we are seeing. Let's start off, though, with iron ore. It's having some reaction after we did get that announcement from China about that long-awaited stimulus. We're seeing iron ore right now up about 0.6%, trading close to $105.90 a ton. That is, of course, reversing, rising the most in 2 months following that pledge from Beijing to revive economic growth. And yet we're still seeing the metal down by about more than a fifth this year as this years-long slump weighing on demand. Also, Aussie dollar having some movement today, clearly some movement downside, about 0.8%, pulling back from closing in the green on Monday following that news from China. But this morning we did get commentary from the RBA signaling inflation potentially moving towards its target, having some reaction there from Aussie dollar. We also have U.S. equities on the board, a bit unchanged as it stands. But on Monday, they did close the session in the red, pulling back after those string of record highs that we did see last week. The Nasdaq in particular had a pretty difficult day on Monday. Most of the tech sector was lower after we got that news about Chinese regulators planning to announce that investigation, or announcing that investigation into NVIDIA. And of course, NVIDIA being a key bellwether for AI, so pulling back some of the rest of the tech sector. I also am looking closely at what's happening with Bitcoin. We've been paying close attention to the cryptocurrency since the U.S. election, pulling back down to 96,000. Seems like there's a bit of a pivot away from risk taking in the market. And of course, we did see some upside for a ton of upside for the cryptocurrency following the election of Donald Trump, and of course his appointments of a few crypto-friendly names, but still seeing a bit of a pullback from that 100,000 level that we did see last week. Jumana?
Jan, thank you so much. Right, we are here on day 2 of the Abu Dhabi Finance Week, where some 18,000 global business leaders, banking CEOs and investors are gathering to discuss opportunities in the wider region. Joining us right now is Bill Ford, the CEO of General Atlantic. Great to have you here, Bill.
Jumana, great to be here.
Yeah, well, I know that you're opening up your office in Abu Dhabi this evening is the official inauguration. What brings you to Abu Dhabi? Why is this an exciting time for you to be here?
Well, we're very excited to be announcing the opening of our Abu Dhabi office today, actually right now, which builds on having invested in the region for 12 years and committing $1 billion of capital. So it was quite natural for us to open an office and put an investment team on the ground. But we see a real burgeoning of entrepreneurship happening in the region, and I really believe that the Middle East is the next big entrepreneurial hotspot. And we've watched this happen before, as when we moved to India, China, Southeast Asia, Latin America over the last 25 years. We've always had our eye out on, what are the areas that are really emerging in terms of entrepreneurship, and here's
Could this be the first step towards perhaps opening up a Middle East focus fund?
Could be. Right now we're investing out of our global fund, and I know that our global investors are very excited to have exposure to some of the companies that are developing here.
What are some of the sectors that you're looking at here? Where are you seeing exciting opportunities?
Well, it's an incredibly digital region, as you know. I mean, 80% of the population have smartphones. 90% of young people are also on mobile technology, using e-commerce, social media, et cetera. So it's ripe for digital entrepreneurship and technology investing. But we also see opportunity in consumer. Consumer spending is growing rapidly. One exciting thing about the region, people talk about the headline growth rate of 4% off of a $4.5 trillion economy. But the non-oil part of the economy is going to add $1 trillion in the next 5 years, and that'll cause GDP per capita to grow by almost 50%. So I think consumer investing is going to be quite attractive too.
Yeah, well, you and I have got a panel later. We're talking about entrepreneurship and also speaking to the founder of Property Finder, which is a company that you have invested in. Capital is increasingly, I guess, from a founder's perspective, increasingly difficult to come by, given it's a higher interest rate environment. How do you go about selecting the types of companies that you want to invest in? What is it that you're looking for?
Well, as a growth equity investor, we hope to fill that capital gap. I mean, while there's a very high-quality developing entrepreneurial ecosystem here and venture capital ecosystem, scale capital that can help scale these companies with growth equity has been missing, and we want to step in and fill that. But I think we see companies that are really addressing some of the critical opportunities in the region, which again increase consumption and taking advantage of a heightened digital economy.
I guess one of the sort of bigger themes in the industry that has sort of held back the industry the last couple of years is the dearth of exits. Do you see that changing in 2025?
Well, I think the capital markets is developing rapidly here. I mean, Abu Dhabi is becoming a global financial center. I think with the Lulu IPO here a couple of weeks ago, and with the Taliban IPO in Dubai, I think it's going to begin trading today. I think you're starting to see some exciting IPOs and exciting public offerings that I know are attracting global investors to the region. If that keeps happening and we have the development of the capital market and more importantly development of an IPO market, I think it's going to create a flywheel effect where more entrepreneurs are going to see the opportunity, start companies, take venture capital, take growth equity with the hope that they can be a public company someday.
Yeah. Let me just ask you more broadly, the rest of the world. How are you thinking about the outlook for 2025? People are talking about the return of President Trump might unleash animal spirits in capital markets. What is your view there?
Well, I'm optimistic. I think the macro cycle has turned to the positive. Inflation seems to be under control. Interest rates are flat to potentially moving down. GDP data around the world is generally pretty positive. I'm optimistic President Trump is going to start to tackle some of these tough geopolitical issues. So I think it's right that investors are optimistic as they go into next year. We've had a difficult exit environment in the U.S., relative to antitrust enforcement, a less receptive capital market. I think President Trump plans on changing all that. And actually, I think it'll be a much more attractive investment environment for private equity and growth equity.
Yeah, and you say that, potentially we could start to see more exits, more M&A, more deal making. What could derail that, do you think? I mean, again, at the same time, you're squaring that up with a background of very perhaps rich valuations on the public side, stock markets at record highs. Did you worry about that?
Well, I think these macro conditions need to stay positive. I mean, we need to see GDP growth continue. We need to keep seeing inflation staying under control, which will allow central banks around the world to basically moderate interest rates over time. If those conditions are in place, I think it's going to be a very, very active year.
Yeah, that's in the U.S. What about other parts of the world? People are turning quite cautious on the European outlook and also the U.K. You hear of companies actually delisting and moving to different jurisdictions. How do you feel about specifically the U.K. here?
Well, I'm worried about Europe and the UK, but I think one interesting question that the world has to answer is that 70% of the world's capital market activity or public exchange activity is in the US. And the world wants and needs another capital market center. I think There's questions whether can London recover its position, can Hong Kong recover its position as major capital market centers, or is it going to be something like Dubai or Abu Dhabi with all the capital flows happening here? Could they emerge as a major capital market center? Because the world does want an alternative to just the U.S. capital market, despite its inherent strength.
So let me bring it back to here then, just to end up the interview, given you say that, this could be a potential, yesterday I was on a panel with Ray Dalio. He said renaissance moment for Abu Dhabi. What would you need to see on the capital market side to sort of bring about the right ecosystem for, investing, exits, secondary trading? What is it that needs to be done?
I think a few things. I think government policy has been pro-growth and pro-market, so that's a big positive. I think we needed to see the markets keep deepening in terms of liquidity and in terms of global investors investing here. I think, again, one of the most exciting things about the Lulu IPO as well as the Talbot IPO is that more than half the investors were global investors outside of the region, and that's important. Because if global investors start to gain confidence that the Middle East as a capital market hub, it's going to attract more capital, and I think it'll attract more offerings. Private capital's here. I mean, we're excited to open the office and bring General Atlantic, put General Atlantic on the ground, even though we've been here for a while. But I think that combination of venture capital, growth equity, other forms of private capital, and a better public market, it creates a very bright outlook for the Middle East. Yeah, well, that's a great place to leave it. Bill, thank you so much, and looking forward to our panel later today. That was Bill Ford, the CEO of General Atlantic.
Great interview there, Jumana. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, give us a sense of what you're looking at.
Well, we're seeing a mixed bag, but mostly positive, and this is thanks to the positive stimulus signals from China's top leadership, the Politburo. But beyond these tone suggestions, what investors want to see is it being translated into action, into policy. So CSI 300 pairing gains of 3% from earlier today. We are seeing the South Korea stocks in a pretty buoyant mood, though. This is their first gain since last Tuesday, where we saw that political turmoil really embroiling the country, and we're seeing the TAIEX, the outlier today. This is a drag from TSMC. It's closed lower, and this is against the backdrop of NVIDIA's China probe. Of course, TSMC is a supplier to NVIDIA, the US chip maker. That's despite, after the bell, we're seeing how this sales really looking quite solid. I think it's a 34% climb for the month. Guys.
Thanks so much, Avril Hong in Singapore, for us there with the latest in Asia. Now coming up, it's billed as the world's largest private investment vehicle for climate finance. But are there enough projects for the UAE-backed fund to invest in? We'll speak to the Alterra CEO next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Abu Dhabi. Well, it's a year since the UAE unveiled ambitious plans for a fund to mobilize $250 billion to accelerate the climate transition by the end of the decade. So far, though, the fund called Alterra has managed to spend a fraction of that, just $30 billion of cash, as it tries to find deals suited to its mandate of investing in the energy transition. Well, we are going to talk more about that, but for now, just happy to say that joining us here at Abu Dhabi Finance Week is the CEO of Alterra, Majid Al Suwaidi. Great to have you with us, Your Excellency. I was at COP, a couple of weeks ago now, and it was the finance COP. There were lots of talks going on, and they were fraught talks about where this financing was going to come from, who was going to contribute. Eventually, in the 11th hour, they came to an agreement on this $350 billion a year annual target. First of all, let me just ask you, is that number big enough to get to the climate objectives that we want to get to?
Well, Jumana, first of all, thank you so much for having me. It's really great to be here at Abu Dhabi Finance Week. And, we're very excited for Alterra. This is our first time, and we're still a baby organization. As you mentioned, we were launched at COP28 about a year ago, and we've got this target to hit $250 billion. And importantly, why is that important? We know that we need to mobilize $9 trillion annually to tackle climate change, to keep under our 1.5 degree target. And you were 100% right. COP29 was about how do we mobilize that capital. And yes, we wish we could have got more, but I think that our Azerbaijani presidency and our friends did a great job in managing to get it over the line, to get an increase from what we previously had of 100 billion a year. But what it really said was that now we need to see how we mobilize the private sector. And I think that that's what's really exciting. Government stepped up and said they'll give 300 billion per year. Now we need to mobilize the private sector, and that's where Alterra can be a really important part of this story.
Yeah, so let me ask you about that, because to incentivize the private sector, you have to de-risk the opportunities. The private sector will come when they think that the return on investment is there, but also that they're taking risk that's commensurate with the returns that they're going to be looking at. So how do you create the right environment to entice the capital markets, to invite the private investors?
Yeah, we spent a lot of time in the lead up to COP28 trying to figure out what were the challenges that were keeping us from particularly mobilizing capital. And the thing we heard time and time again were that there were these barriers that they were trying to get across. Some of them are real, things like currency, political risk, things like that. But others are simply just perception or a lack of awareness of the opportunities in the developing world. You know, we in the UAE are from the global south. We're used to investing in the global south. And that's where we felt that we could make a difference. And that's why Alterra is exciting. So we are a 30 billion catalytic fund. We have 5 billion committed to the global south that can act in extra catalytic ways, and 25 billion that can invest anywhere in the world. We've already been super successful in that we've created 2 funds with BlackRock and TBG, brand new funds that we've seeded, and they've now gone out and raised against, and we've really exceeded the expectations. We were told we could get 1.5, maybe 2 times our capital. We've reached 9 times our capital, and we haven't even finished fundraising. And that's the key thing. We're in that fundraise phase, and now we're soon going to be going out and deploying that capital on the ground.
Do you worry about this global wave, this global anti-ESG wave, and the fact that the climate agenda has become so politicized now?
I think that we have to stay focused on what's really important. And my experience as DG of COP and somebody who was traveling around the world was that when we talk to leaders, when we talk to people in the climate space, they still understand that we need to deploy the capital and we need to do it fast. If we're going to bring global temperatures down, we need to bring finance up. And so what we saw when we engaged with leaders and thought leaders is that they are interested to invest in this. And as I said, we created these vehicles and we've seen a groundswell of finance funds coming in behind us, investing their capital, and that proves that there's an interest out there in this space.
Okay, so I'm just going to leave you with this. I was reading a report around COP because I was there, suggesting that 70% of climate financing is actually going into the US, and most of it is going into advanced economies. I look at that and I think this money isn't being channeled to the countries that need it the most, and that's in the global south, that's in sub-Saharan Africa. So the incentives don't seem to be aligned.
Jumana, you are 100% correct, and that's why we wanted to create Alterra, because what we heard as we were going around the world was that we had an equation where you had about 80% going to the global north and only 20% going to the global south, and the bulk of emissions are going to be in that area. And as we see population growth, increasing in energy demand, by the way, that's an economic opportunity that we all should be investing in. And we need to make sure that we're hitting those low-hanging fruit, that we're investing in the developing world, emerging markets, and finding solutions for, like you said, the poorest countries in the world. That takes traditional finance, it takes blended finance, it takes working with international financial institutions, but it also takes new models. And that's what's exciting about Alterra, is that we're bringing new models to the market of how to do this and how to tackle these challenges.
Good place to leave it. Really good to chat to you. Majid Al Suwaidi, the Alterra CEO. Well, coming up, the World Bank cuts Kenya's growth forecast for 2024. We'll discuss what is impacting the East African nation's economy next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The World Bank says Kenya's economy is heading for its worst performance since the COVID-19 pandemic back in 2020. The East African nation's 2024 economic growth outlook was trimmed to 4.7% from 5% forecast back in June. Floods and anti-government protests are weighing on output, along with the government's push for fiscal consolidation through tighter spending. For more, let's bring in Bloomberg's Andiro Oganga, who is joining us from Kigali. So, Andiro, how is this report highlighting Kenya's economy after what we know has been a really difficult year for the government there?
Absolutely, Jen. There are a couple of things that the government has tried to do so that they can get it right. One, inflation is down to 2.8%, which is within the central bank target range. Then the currency appreciated 20% against the dollar, making it one of the best currencies in emerging markets. And international reserves hit a 2-year high. And that's where the good news is. Now we start with the bad news. We see that private capital inflows subdued, foreign direct investment declined. And this just went to show decreasing investor confidence in Kenya. Kenya earlier on went back to the markets, successfully rolled over its $2 billion Eurobond that was mature, which was almost an effort to try and show investors that they're able to take care of their fiscal needs and they're also able to honor their debt obligations. However, the country has a budget hole of $2.7 billion after they were forced to pull back the finance bill after deadly protests. And while revenue collection is decreasing, government expenditure is increasing, coupled with high debt servicing costs, the government has little to no money on social and development spending. And so these are some of the things that are leading to that softening growth that we're seeing.
And what's the expectation then for the Kenyan economy heading into the new year, Andiro?
The World Bank says they're keeping their hopes moderate and the growth will be gradual over the next couple of years. If we look at Kenya's debt, it remains in high risk of debt distress. Domestic debt now accounts for 51% of the country's total debt stock. And it's a liability because if you look at the vulnerabilities of this, the yields are high, the maturing periods are declining. And if we just stay with the local lending market, you see money going to the private sector is reducing, which is shrinking the growth of that sector because one, interest rates are high and they're being crowded out by the government. So the World Bank says that the country needs to address a couple of structural challenges in order to accelerate their growth and also address challenges such as unemployment in the economy.
All right, Bloomberg's Andiro Oganga in Kigali giving us the latest about Kenya. Andiro, great to have you on. Let's take a look at where markets are positioned. As we mentioned, there's a lot of news, geopolitical and also market-moving news that we're digesting. But as you can see, U.S. equity futures a bit unchanged as it stands right now. And yet, on Monday, we did see U.S. equities in the red, closing after a string of record highs last week. The NASDAQ also pulling back as we saw the tech-heavy index getting a bit of a hit after NVIDIA it was announced that the Chinese regulator was going to investigate NVIDIA. Also, we're looking at Euro stock 50 futures, looking like a muted open as well. Jumana?
Yep, and not just equities. Let's take a look at fixed income as well as we head into a big event for the week for U.S. investors, and that is the CPI figure that is coming tomorrow. So here's the picture. We've got 10-year yields at 4.18, so beginning to move up again after the rally that we've seen over the last week. And again, this is in anticipation of that CPI print tomorrow. Should it come in slightly stickier, then that could once again remove the possibility of a more aggressive interest rate cutting cycle out of the Fed. So that is the picture for fixed income. But that also wraps up our show for today. Horizons Middle East and Africa. I'm Jumana Bersachi on the sidelines of Abu Dhabi Finance Week.
And I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.